This exempt income is usually from exempt account. You will get exempt income dividend when you have an exempt account. For example, distribution from pioneer status, distribution from investment tax allowances, or shipping. All this gives rise to an exempt account. So distribution from an exempt account will give you exempt dividend. When you do your tax computation, you need to put the word nil in there. You need to put the word nil in there. When you get a single tier dividend, this is dividends from any companies registered in Malaysia. So it doesn't matter whether it's a Sdn Berhad, a public listed company. If they declare dividend and then it is dividend, it's a single tier dividend. So any dividend that you get from a company registered in Malaysia, company registered in Malaysia, it's a single tier dividend. In the tax computation, you need to use the word nil. Do y'all understand? If you guys remain silent, I will not entertain this question anymore from any one of y'all. Do y'all understand?
Yes, Miss.
Yes. All right. Now, when you get a taxable dividend, for example, from a unit trust, in your tax computation, you will show it this way: statutory income, employment income, dividend. Dividend must be shown at gross. So what do I mean by gross dividend? Say this is your dividend certificate. Your gross dividend is 1,000. The company, the unit trust will minus. So the unit trust will minus this tax amount, $240. Mr. A will only receive $760. But in Mr. A's tax computation, he must declare the gross amount. He must declare the gross amount, $1,000. This is the amount that he must declare. Although he has already suffered tax of $240, he must still declare the full amount in his tax computation and get his chargeable income. So whatever his chargeable income is, you will pay tax. You will calculate the tax based on this chargeable income. Because you have already suffered tax for that dividend that you have paid. This dividend now becomes your tax credit. The dividend that the unit trust, the tax that the unit trust has already minus from you will be your tax credit, Minus that, whatever tax payable is what you need to pay. Do y'all understand? This is not a double tier dividend. This is not known as a double tier dividend. And I really don't know where do y'all get this word double tier dividend from. All right. The only thing that exists is single tier dividend and two tier dividend. And this is not, I repeat, this is not a two-tier dividend. This is known as a frank dividend. This dividend is known as a frank dividend. Please understand this. Do y'all understand? So whatever tax that Mr. A suffered at source, that means they minus it before paying him his dividend, will be your tax credit. Do y'all understand? Yes or no? Yes or no?
Yes, Miss.
Okay, now REITs dividend. When you pay REITs dividend, Mr. A's tax computation, you will have your statutory income. You will have your employment income. And your dividend income from REIT. You do not put anything here. This whole thing, you do not need to include. You do not need to include. Why? Because for REIT, dividend is subjected to withholding tax. It's subjected to withholding tax. So even if you put the word nil shouldn't be here. You should put 0. If you put that in there, it's 0. It's not nil. Nil means the dividend is actually subjected to tax under Section 3 of your Income Tax Act. However, it's exempted. So it creates a nil tax impact. However, withholding tax is when it's subjected to withholding tax and it's a final tax under your tax computation, it's out of scope. That means it doesn't come into your income tax. It is the computation at all. So withholding tax is final tax. When you already pay your withholding tax, consider your tax liability has already been settled. 0. Understand or not? The tax liability is already settled. No need to include in your tax computation. So when you guys are looking at your answer, your tutorial answers, and then you come and the explanation there is clearly stated, it is subjected to withholding tax, it is final tax, and then under the tax computation, they put there 0, and you guys still come and ask me, man, so REIT is not taxable, is it? Guys, what are y'all studying? What are y'all reading? You read one thing and then you come and ask me, so it's not taxable, is it, man? Your explanation clearly says it's taxable, right? Your explanation clearly says it's subjected to withholding tax, right? So it really means it's taxable, right? And then you come and ask me, ma'am, got mistake here because they put 0. What are you all studying, guys? What have you all studied for this past 14 weeks? What have you all studied in text 1? What have you all studied in text 2? If you guys are going to study blindly and then come and ask us such questions, do you really think it's fair? If you guys are not even willing to stop and think before you ask questions, do you really think we are that free sitting down here to entertain questions that you yourself refuse to understand? Come on, guys, please think. Use your mind to analyze the question and understand what you're studying. I've been telling you all that from day 1. Do not study blindly. Do not just memorize your answers. Look at your answers. Understand your answers. I've also told you all when you do your past year questions, make sure you change your laws to the current year law. And I still get questions. Why, man? Last time secretarial fees is added back. Now it's not added back. Huh? So in other words, you guys expect us lecturers and tutors to study for y'all, is it? Y'all are refusing to study, is it? Y'all are refusing to know what is going on. You just want to memorize, is it? Come on, guys. 2 weeks' time is your exam. We are not going to be sitting down there and writing the exam for y'all. You all are. So put a little effort in and understand your answers. Any question, guys? This is the last time I'm going to explain dividend for REIT and dividend for unit trust. Is there any questions? Do you all understand? Come on, guys. Do you all understand? Anyone has any questions about it? Okay. Before I start today's tutorial, do you all have any questions that you all want to ask me about the exam? Do you all want me to explain to you all any areas that you all don't understand about the exam? Come on, guys. I know I just shouted at y'all. I know I sound very angry, but I've calmed down. Do you all have any questions that you all want to ask me? Anything that you all are not clear about? Guys? Okay, if you have no questions, take out your tutorial 30. Look at question 2. Yesterday, you and your tax principal participated in a conference call with a senior management of Planet Sdn Bhd, an investment holding company. Below are extracts from the notes of the conference call and an email from your tax principal to you and his tax assistant. Planet has identified Tan Sdn Bhd, a resident company, as a suitable investment. Planet and Sun are currently unrelated. So if they are unrelated, please remember you cannot actually claim group reliefs. All right, so that's the first thing you should identify. No group reliefs can be claimed. Now, Sun has been manufacturing solar panels for 3 years and has an accumulated tax loss of 6.8 million and unabsorbed capital allowances of 1.5 million. So the 6.8 million And the 1.5 million are your tax assets. Are your tax assets. All right. Now, apart from so that means Sun has a high tax asset. Apart from the solar manufacturing business, Sun does not have any other assets or sources of income. All right. So that means the only active business that Sun has is the manufacturing business. All right. If they lose their manufacturing business, they become a dormant company. For now, they are an active manufacturing business. Sun expects to make a profit about 8.5 million in the year ended 2016. So the very next year, they are expecting to make profit. So when they make profit, that means the unabsorbed losses can actually be utilized to minimize this profit. The negotiation price for Planet either to purchase Sun shares or take over Sun's manufacturing business, which means that they either buy shares in Sun or they buy Sun's assets and liabilities, is 75 million. Is 75 million. Whatever alternative is chosen, Planet will finance the acquisition with a loan of 55 million. That means they are going to take 55 million either to buy shares or to buy assets from its non-resident parent company. So please understand, if the company is a non-resident, all right, any loan taken from that will give rise to interest. And that interest will be subjected to withholding tax. Will be subjected to withholding tax. And 20 million from a Malaysian commercial bank. So if you take 20 million from a Malaysian commercial bank, this is a resident company taking a loan from a resident financial institute, also give rise to interest, but the interest will not be subjected to withholding tax. The 20 million interest will, the 20 million loan interest will not be subjected to withholding tax. Annual interest rate on this loan will be 11.5% to the non-resident company and 7% to the Malaysian commercial bank. So look, there is a difference. 11.5% is higher than 7%. 7% is market rate. So that means there will be transfer pricing issue. There will be transfer pricing issue. Planet would like to know what difference there would be from an income tax perspective if it required the entire, if it acquired the entire share capital of Sun as compared to acquiring all the assets and liabilities of Sun's manufacturing business. Extract from the email from your tax principal. Please draft a letter to the managing director of Planet regarding the proposed investment in Sun. Consider the two options for the proposed acquisition. Planet will acquire 100% of the share capital of Sun for 75 million, or option 2, Planet will acquire all the assets and liabilities of the business of Sun for 75 million. The issue you should consider for each option: the form of income derived from the investment, deductibility of interest expense for planet, transfer pricing issues, treatment of trade receivables and inventory, SUNS unabsorbed losses and capital allowances. Now, guys, this question, I am taking the effort to do it for y'all because it's important in your exam. So please, for all of y'all who decided to go off, your loss, not mine. Can you all stop recording the session, please?